Main Street stock, ticker symbol MAIN. Another famous monthly dividend paying stock. It has been a while since I checked this one, so let's dive in. This stock is up 10% year to date, underperforming the S&P 500, which is up 16% year to date. On the 3rd of August, Main Street presented quarter results where they beat on EPS and revenue. Analysts think they will beat on the next earnings as well. And most people love Main Street stock because of the monthly dividend, and I understand why, with dividend yield at almost 7%. With the stock getting some momentum and being a very popular monthly dividend stock, it is the perfect time to do an analysis. And I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does Main Street do? Main Street is a principal investment firm that provides long-term debt and equity capital to lower middle market companies and debt to middle market companies. If we dive in the most recent earnings report, we see that net investment income was reported at $1.06 per share. Net asset value was reported at $27.69 per share, which is an increase of 1.7% versus the previous quarter. In here we see that interest income has increased with 52%. Total investment income increased 50%. Keep in mind that the 33.3 million increase in interest income increased primarily due to an increase in interest rates and all other stuff. Another interesting number is the return on equity, which is reported at 19.2. And one of the things Main is very proud of is that they never decreased the dividends in the past 15 years. They have been steadily increasing the dividends, the NII per share and net asset value per share. They also really like to pay supplemental dividends, which can add up over a longer period of time. In here we see the portfolio breakdown. The largest industry is representing 9%, so this looks really good to me. In here we see the transaction type and geo breakdown as well. Again, looking really good to me. This is one of the things Main Street is known for, being very well diversified. And now that we know more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week, and also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. Main Street is a 3.2 billion market cap company. PE ratio is at 13, which could indicate that they are undervalued right now. Later in this video I will show you my price targets for Main Street stock, so make sure to watch until the end, because PE ratio is only telling a small part of the full story here. Revenue is at 428 million, and in this graph we see that revenue went up really nice and steady, with a big spike most recently. Over a longer period of time, margins are going up and down quite a bit. It took a hit a few months back, but right now it is increasing again, which is a good thing. EPS is following the same pattern as the margins, so nothing special to mention here. Analysts expect 2023 to be a great year for Main Street in terms of EPS growth. After 2023, it is expected to see some big decreases. For the revenue, it is a pretty similar, but with slightly different numbers. It is expected to see big numbers in 2023, but after that some big decreases as well. Return on assets is sitting at a negative number right now, which is something that I don't like. Return on equity looks really good at 11%, and the most important number, return on invested capital, is sitting at 9%, which is a great number. It is higher versus the 5-year average, which is also nice. Current ratio is at 1.5, which is looking pretty good. Right now, Main Street has 2 billion in debt, and I prefer companies that can pay down at least a big chunk of their total debt with the total cash position. Main Street has 80 million in total cash, so they can't pay down a big chunk of their total debt, which is something that I don't like. So it's very important that free cash flow is growing, since this is used to pay down debts of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is not looking any good. To me, this is a big problem, so keep an eye on this number. Shares outstanding are increasing, which is not a good thing in general. But Main Street issues new shares to raise capital and grow the business. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at almost 7%, which is a great number. Annual payout is at $2.82 and payout ratio is at 68%. I prefer 50% or lower, so right now they have 32% left in cash to buy back shares, pay down debt, do acquisitions and all other things. The 5-year growth rate is at 3.4%, which is not the highest number to be honest. But dividend yield is a great number already, so I don't mind that much. They increased the dividends for 2 years in a row, which is kinda nice. And if you take a look at these numbers, the dividends paid since 2012, you see that Main Street is increasing the dividends at a decent rate every year. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. And here we see that over a longer period of time, payout ratio is decreasing, which is a great thing. In this graph we see the expected dividends in 2023 and 2024. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to grow at historical growth numbers, which is very nice. The spikes that you see here historically are supplemental dividends. Overall these dividends look pretty good to me, but how about the historical returns? I decided to compare Main Street stock with the overall market, in this case the S&P 500. Next to that I added two competitors, Gladstone and Analyst Capital. On the 5-year chart we see that Main Street was beaten by the S&P 500. In total, Main Street returned 59% including dividends, versus the S&P 500 sitting at 68%. Analyst Capital had the highest return with 82%. On the 1-year chart it looks pretty different, with the S&P 500 returning 10% including dividends, versus Main Street returning 9% including dividends. On the 6-month chart it is Analyst Capital that is having the highest return with 17%. The S&P 500 is not far behind and Main Street returned 11%. On the 1-month chart all stocks had a similar return, nothing special to mention here. So bottom line, Main Street was beaten by the competitors and the S&P 500 in the long run. So could this be the perfect time to buy Main Street stock? Well, let's check the price targets that I created for Main Street stock. Unfortunately, the tool that I use is showing me some weird numbers here, so I'm not be able to use this one. I hope this will be fixed very soon so I can give you my 3 price targets as I always do. What I do have is the price target of my video of 3 months ago. For now this is still feeling like a justified price target. And my opinion is that the mid to high price target is the most justified here, indicating that Main Street is still undervalued. Very soon I will do an update video with the updates of the price targets, but for now I'm sticking with this one. My final conclusion on the stock is that I do like the business. It is a great company that pays a solid dividend. From a value point of view things look pretty interesting, but I do have a few concerns, being the free cash flow and the future growth patterns. I think the coming year will be really crucial for this company. For now I've added them to my watch list and I'm just waiting for a small dip so I can enter at lower prices. I would love to see $37 or $38. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.